Hi, welcome to Trader Compass Technical Analysis Learning Program. Yesterday, in the new series, we covered few of the topics like what is risk reward and the importance of risk reward. I hope everybody could able to understand that. That was very easy and very important. How risk reward is going to play a vital role in our trading, how good it is, why do we need to be very careful with our entry points. That's what we discussed. And for the better understanding of entry points, we are going to deal with support resistance levels, supply demand zones, and then we are going to discuss entry points and where to exit, right? Before that, as I told you, uh, the first major important aspect is risk reward and its importance. And after risk reward, there is one more concept called risk management and money management. See, these two are two eyes for any trader. These two are main aspects or main points for any trader, especially for intraday traders. Forget about investors or long term or short term traders. Intraday traders, especially those who are doing it for short term, like swing trade or intraday trading, for them these two are very important. Yesterday we completed the topic called risk reward and entry points. So let's see today what is risk management and money management. You might have heard about risk management from many other YouTube videos or from many other trainers and all, but this is what basically I suggest to follow any trader. Then I can bet on this. I can openly challenge anyone. If one follows this kind of risk reward and risk management, money management, even though he is a very new to stock market, he never ever gets a chance to get out of the market. That is for sure, right? Before going to subject, I just want to share 2 points which are happened today in live market. One is the trade which I have shared in channel about Reliance, and the other one is Bajaj Finance. Two beautiful trades today we could able to get. Bajaj Finance gave us almost 100 points move, and Reliance, of course, that was beauty. Very good, very beautiful trade. Okay, so let me explain you quickly in just 2 minutes, and then we come back to our risk management, money management topic, and then we close the session for today. Tomorrow we are going to deal with support resistance levels and other concepts. Okay, so first of all, let me go to the chart. What is shall I tell you? Bajaj Finance. Okay, Bajaj Finance trade I shared entry at, I believe, to where here. Yes, this is the level, right? This is the level I marked as support resistance level. It is nothing but 2114. So this is where I gave the entry. This is a breakout trade, guys. Breakout trade confirmed by the volume. Look at this. Look at this. This is the volume confirmation. Big confirmation, big volume, and the breakout happened. Once this breakout happened, we shared this trade at somewhere around 2112 or 2114, and from there it delivered 100 points move. I was expecting this level 2156 or 2160, so I kept my target to this level, but it delivered more than that. Now let me tell you how we could able to expect this big move. See, first of all, everybody is looking at this as the entry. Okay, I'll tell you, don't worry, how to draw these lines, support resistance lines, what do you understand by this gap and all, I'll explain you. Okay, now just try to understand. There is an entry with a breakout. Okay, and the second point is there is one more breakout called channel breakout, a trend breakout. If I draw a line like this, the stock is trying to go up, coming down, go up, coming down, go up, coming down. But look at the beauty in this one big candle. See here also the stock tried to go up, came down. But in this one big candle, it could able to happily cross these two resistances, this and this, which is trying to stop. See, previously it went there, it stopped, it came down, but now it could able to cross that with good volume. That means good buying numbers. So that's a clear cut confirmation that the stock is going to blast. After that, look at the beauty from 21162 2241, almost 100 plus points, 120 points, 130 points target given. So if someone has carried for BTST, even it is looking for tomorrow, it's looking good for tomorrow also. BTST, they might have earned in one future trade, lot size is 250, 100 points plus, 120 points plus, so almost 30,000 rupees in one trade. That's the beauty. No indicator required, nothing required. Make it as simple as that. It can give you success. And sir, what if it fails? What if it fails? What is if it fails? Where is your SL? It's a simple. Where is the big candle bottom? There it is. So 2078 might be your SL. This might be your SL. So this I'll deal with the entry and exit kind of time. But today this trade given based on this. Okay. So this is the beauty of Bajaj Finance. And one more trade shared is Reliance. When it was falling badly, we were looking for buying. See, today Reliance started, came down, touched this level, somewhere around 1392 levels, tried to go up, could not cross this 1414 level, came down, again it crossed with some good volume. See, in this big candle there is a volume. See, when compared to last 5 6 7 candles, this volume is big. This green bar, you can see that, right? Big. So that's an indication there is a breakout and it started flying high. Now you may ask me how you could able to derive these levels. See, this is not the level which I derived by using intraday or 15 minutes chart. No, this is the level which I brought it from 1 day chart. See, if you look at daily chart, look this beauty. The stock previously tried to fall here, but there is an immediate bounce back. Right? You can see this small green candle. Now check the bottom of this green candle. You can see the values here. What is the low of this green candle? What you can see? 1410. The low here, the low 1410, right? So this 1410 is acting as a level. So whenever the stock is trying to fall, they started picking it up here, and once this 1410 is broken here, look at the beauty, beautiful fall. And then even here it tried to go up, they tried to stop at 1410. See, almost 1400 levels, they tried to stop it here. Okay, this is one condition. So this level 1400 came from there. And check the previous dozy, there is a small dozys, right? It made a 1385 high. And look at this dozy. Dozy means there is a confusion, sellers are selling, and suddenly there is a buying pressure, they're trying to stop it. So this is the level of 1390. And again, if you go back, see there is a level of 1392. Again, see 1396, 1390. Here you can read the levels: 1397, 1392, 93. So there is a buying pressure in the range of 1393 to 1396. That's the reason I mentioned 1394 as SL. See, the SL is 1393, 1394 levels. And entry, we have given this reversal point as 1414. this as 1414. Now if you come back to 5 minutes chart, there it has given the breakout with a good volume. See, good volume, beautiful volume. Then you know the remaining is history, you know the story. Happily reached the level of the 1450 levels. From here it started and it reached almost there. That's the beauty, right? So this is how we could able to derive these two trades. You should have patience, you should be watching market, and you should wait for your entry point. Should not rush into the trade. You need to wait for the perfect level, wait for it, then take your time, take a shot like a sniper. That's it. It can deliver the profits, right? So these are the two charts which I wanted to share. Now that's gone, that's done. Let's go back to our main topic called risk management and money management. Okay. Yesterday we discussed risk reward. It should be good if you follow 1:2. This is what I said yesterday. It doesn't matter what is your success ratio, strategy success ratio. Even if you are having 50% success rate also, by following 1:2 risk reward, you can make money in the market. That's all we discussed. And entry point is more important. See, if you look at Reliance trade today, we followed 1:2 risk reward. Yes or no? See, the entry is at 1414, SL is at 1894. So that means it's a 20-point risk, and the reward 20 points. So that means 14 plus 40 points. 20 plus 40, 54. Look at that. 54 is our target, but it almost reached 48. So fair enough. 3-4 points here and there, it is good to book it. That's it. So 1:2 risk reward we followed. And don't ask me about risk reward in Bajaj Finance. That's a beautiful stock for today. Forget about that. Now, what is risk management? What exactly does that mean? Many traders feel that by making by overnight they want to make good money. They will bring with 10,000 20,000 capital, they dump that capital and they start trading, and they don't mind to take leverages, like by using MIS order. For the 30,000 rupees they take 3 times leverage, 90,000 rupees. They buy stocks, they trade, they hit SL, they hit targets, they do all these kind of things. But that is not risk management. If you follow those kind of habits in trading or trader life, it's very simple. That's why intraday trader life is most of the times not more than 60 days, not more than 60 sessions, rather I can say 60 sessions, 60 trading sessions. So what does that mean? That means if you are following these kind of habits, or if you are going in discipline mode, then market will kick you out undoubtedly. No mercy, no mercy at all, no mercy at all. It's not to you, not to me. You call the whomsoever great fellow. No mercy at all to anyone. Market is king, market is supreme, market is equal to all, and market never listen to anyone. If someone says market listens to me or market is going according to me, no, they could able to understand where market is going. That's all. Try to understand the difference. Nobody can decide where market has to go. Only we could able to understand where market is about to go. That's all, right? Now what exactly this risk management? See, if you have 50,000 rupees, or say let's make it as easy for 1 lakh, so it will be easy. If you have 1 lakh rupee capital, okay, you have 1 lakh rupee capital and you are trading in intraday, or let's suppose 20,000 capital, whatever, okay, 1 lakh capital, and you are doing in intraday trading, then I suggest don't dump your capital in one trade. Many people do this. They invest the entire capital and they start doing trading. No, that's not the case. I'm talking about only risk management. Okay. Now you try to split this risk into 4-5 trades. First of all, what should be your risk? For any working session, your risk should not be more than 5% of your total capital. Let's suppose if your capital is 1 lakh rupee, then your risk should be 5,000 rupees. Once you hit 5,000 rupees loss on any particular session, you are supposed to close your terminal. Nothing doing, you are done for the day. close all the remaining trades and finish your terminal. That's it. So your limit is 5,000 rupees per day, 5% of your total capital. I repeat, 5% of your total capital, nothing more than that. Okay, so let's suppose if you have 1 lakh rupee, then this 5 lakh rupee, again you don't go with a one trade, you try to split this into 4 or 5. I suggest go with a 5 trades. So each trade you will have capital of 20,000. This might be your capital, and in each trade you can risk 1,000 rupees, and your reward will be, as we are following 1:2 risk reward, 2,000 rupees. And let's suppose you have a 50% success rate. Success rate is 50%, right? So even though you hit 3 trades in loss, that means you are going to lose 3,000 rupees. 2 trades profit, that means you are going to gain 2 into 2,000, 4,000 rupees profit. Overall, in a trading session, you will be in a profit of 1,000 rupees. That's the beauty. So you should have a cap on number of trades. So number of trades should not be more than 5 trades in a day. Let the market go to any direction. Let the market be in 200 plus point, 300 plus point, 200 minus point, 300 minus point, whatever it is. You are supposed to restrict your number of trades. First, you should be disciplined. If you want to become a trader, then you should have discipline. You should follow discipline. Nothing doing, you should be very clear, right? 5 trades in a day, and each trade will be consisting of 1,000 rupees risk, as your total capital is 1 lakh and your total risk is 5,000. Let's suppose if your risk is only for 3,000 rupees, total risk is 3,000 rupees, then how do you manage this? Simple, divide this 3,000 by 5, which is nothing but 600 rupees. So in a single trade you are supposed to take 600 rupees risk. That's what you need to do. You are not supposed to go beyond this. Now, sir, this is good. Let's suppose now I have taken 5 shares of say one is ABC company, BCD company, CDE, GHI, XYZ. There are 5 companies. So you initiated the 5 trades. It might be boring you, but this is the essence of stock market. If you lose yesterday's session and today's session, I can bet on this. You may go to any big trainer, you may go to any good analyst, you learn from them, you pay them 50,000 rupees, 1 lakh rupee, 2 lakh rupee, you train yourself for 1 year, 2 years, but still you will never get success in trade market. I can bet on this, unless and until you cover yesterday's session and today's session. If not from me, from anywhere. You should understand risk management, money management, and you should understand risk reward ratio. Then only your success will be there. Right? So we initiated the 5 trades, and in each one we dumped 20,000 rupees capital. Let's suppose now the thing is, this ABC is trading at somewhere around 14-15 rupees. BCD is trading at 987. CD is trading at 468. And the remaining 325 and 798. Okay. Now let me tell you the speaking. See, this is company. This is a capital. This is a CMP. That means your entry level. Now this is your SL level. Target I don't mind. Okay, target I don't mind. I need SL because I need your risk. Now let's suppose your risk is in this 1403 is your SL. In this 975 is your SL. In this 462 is SL. That means you are buying all, and this is your stop loss. So if it goes below to 462, you are going to close your trade. You don't wait for that. Okay. Now in this 313, in this 777. Okay. Now what you need to do is calculate the SL difference. That means your entry minus where you are going to close this trade. Now what you need to do, you need to find the number of shares you can buy. How you will decide it? Your capital amount by your SL difference. So you can buy in this, you can buy 1666 stocks or shares. You use MIS or you do whatever you want, but you are not supposed to buy more than these number of shares. Okay. Now what it is going to do? If you follow this, even though if it is going red, it is going into red and it is going to hit SL, you are going to lose maximum 1000 rupees only. As you are having 1 lakh capital, even if the trade is in red, you are not tensed, you are cool, you can sit calm, you don't need to be worried. Most of the times people go with MS orders, they dump so much money and they initiate one trade, and that one trade, let's suppose the 1 lakh rupees is there, they initiate one trade, that one trade is going to hit a SL of some 7,000 8,000 rupees. They look at the targets only, how much I'm going to gain. Okay, 8,000 rupees I'm gaining. Okay, they initiate it, and once it starts going into red, 3,000 4,000 5,000 7,000 8,000, now they start worrying. 1 lakh rupee, 8,000 rupees my capital, 8% my capital is going, 10% is going. No, I will not close my trade, I'll wait. There may be a reversal today, all of the sudden there is something profit booking game, that's why market is going down. They try to get 100 number of reasons to convince themselves that no, my trade is good, it will bounce back, I can get an entry, I can get a good exit position, I'll not close in red. And they'll be waiting, and they'll end up with a complete loss. This is the story with all of you, and including me, it was there with me also. Okay, no, it's not like that. We should strictly follow the SL rule, and once it breaks 1403, we need to close. So even now the stock is going to 1410 14.8, you are not worried, because even if it hits also, you are going to lose how much? Only 1000 rupees. Only 1000 rupees. Okay. Oh, sorry. This should be done by 1000. Oh, sorry, there is a mistake. 1000 by, because our risk is 1000 only, right? 1000 by 12. Right. That's what I'm thinking. How come these many number of shares? Okay. Right. So if you want to buy ABC company, you are supposed to buy only 83 shares. And here BCD 83 shares, 167 shares, 83 shares, 48 shares. And I'm talking about no leverages, only pure cash. Because if you are taking leverage, they'll give you 3 times leverage. And what if your SL hits? You are looking with 1% SL. There you are going to make 3 times. So 3 into 1%, 3% of your total capital will be going. That means you are looking at 5%, you have taken 3 times leverage, so they'll give you 3 lakh rupee leverage, but the SL will become 15,000 rupees. So once this 15,000 gone, if you come back to original capital and look at this 1 lakh rupee will become 85,000, which is completely wrong habit. So you are not supposed to go with that way. You got my point? This is how you need to split your risk. First point, this is the part end. This is what I want to explain you in risk management. Okay, so the total risk should not be 5% of your capital, and the risk should be shared with 4 trades or 5 trades. Let's make it as 3 trades minimum and 5 trades maximum, not more than 5 trades. Okay, don't make it more again. So I'll explain with a 5 trades example. So each trade will have 1000 rupees loss and 2000 rupees profit, and our success rate is only 50%. Even if you go with a 50% or rather 40% success rate, still you are going to make 1000 rupees profit in a day. Do you understand that? 1 lakh rupee capital you are using, and you are going with 40% success rate, which is the least I'm talking about. If you can go in this way, in a month you will have 20 sessions per day, 1000 rupee. So in a month, 20 sessions into 1000 rupees, 20,000 rupees. Let's suppose 5 days you could not trade, even if you remove that also, 15,000 rupees, which is nothing but 15% of your total capital gains. That means in 6 months your capital is going to be double. How it is going to be? It's very simple. You need to follow 3-4 steps. One is risk reward ratio, the other one is good entry point, the other one is risk management, the other one is money management, which I'm going to deal with now. That's it. Now, how many shares I should buy? Okay, sir, I got my entry level, I got my SL level. Now how many shares I should buy? How to follow this 1000 rupees loss rule? Simple. You divide this 1000 by the SL points, SL difference. How many number of shares you are receiving? Those many shares only you need to buy or you need to sell. Strict rule. And once it hits the SL, you need to exit. So even if you are 100% wrong in a day, even that day also you are going to lose only 5% of your total capital, right? This is the risk management theory class, and if someone follow or anyone follows this, I can bet on this, you can happily close every day in green, every day in green, right? Okay, now what is money management? There is one more concept called money. This is risk management. This might be boring you, I know that, but student says that my risk management and money management class will be an eye opener to all of them, and risk reward class will be the best class, because that's the basic points which we need to be aware of and which we need to follow, and where we commit mistakes so many times, and that kicks us out of the market. Money management. Now coming to the money management, I feel there are two types of traders. One are completely new to the market, they're just taking entry. The other one are, as usual, you people know that you are all experts. I'm very fresh, I'm still learning, I'm not expert, I'm a novice trader. Okay, so now if anyone is coming as a new trader and with a capital of 1 lakh rupee, because it will be easy for me to explain, okay, and expert level with 1 lakh rupee capital. Now what you need to do, don't jump with 1 lakh capital, you make it as 30%, 30%, 40%, whatever the capital you have. If you have 10,000 rupees, start with 30% of 10,000, that means 3,000 rupees. So you try to start your trading with only 30%. I'll explain you why. Then again, this one 30%, and this 40%. Okay, now what happens, as I told you, the trader life in stock market who is not disciplined or who is not aware of stock market is only maximum 60 sessions. Most of the people, 90% of the people wiped off, that's it. So if you start using with this 30,000 rupees capital trading, hardly 60 sessions, that means 2 to 3 months it will take, and your capital will become zero. 2 to 3 months, okay, your capital will become zero. Now what you need to do, improve the same strategy. Don't change your technicals, don't change your strategies, don't change anything. Try to improve your risk reward, try to improve your psychology, try to improve your mindset, try to have a control on your emotions, try to improve your entry at the best point. That's it. Don't change one strategy to another strategy, don't jump here and there, just improve whatever you have. See, if you have a home and there is something wrong with that, you don't sell it and go for a new home, right? You try to do some modifications, the best as possible, you try to do modifications, and in the last stage is okay, sell off this home and you go for the new one. The same way, don't jump from the strategy again, that will become new to you. So try to redefine your own strategy which is suiting you to your emotions, improve your emotions, improve your entry points, and improve the strategy in a better way with a good risk reward. Okay, now first time it took only 2 to 3 months to evaporate your capital, but second time it takes some 4 to 5 months. This will also become zero. But fortunately, see, if 1,000 people started here, 1,000 people started first scenario, only and only 300 people will be there for the second top. Okay, and if fail here also, then third stage, I don't think so more than 100 people there will be. Only 1,000 people started, and to the third stage only 100 people will be there, and this will take 8 months to 12 months. Sometimes it will never become zero, This is the phase where you start learning how to trade in a better way, and you start booking profits in a consistent manner. There you are. Now you are a trader. Now you are a trader. So fortunately, very less people, by just first 2-3 months, they could able to survive in market. As per me, not even 5% of the people, not even 5%, 2% of the people. So out of 10,000, 20 people may success here. So to the second stage, only 300 people came, where success rate is a little bit better. Say 30% people can learn market in a better way at the second stage. So that means 100 people can come here, or rather I make it as a 20%. So 20% means 60 people will come here. And in the third stage, majority of the people, say 50% of the people can get success in their third phase. So out of 100, 50. So if I include all these three, 20 plus 60 plus 50, 130 people. So 1000 people started, 130 people came out. That means not even 13%. These figures are little bit bigger. If you check the practicality or reality, not even 5% of the people are there who are hardcore traders. Only successful hardcore traders are 5%. 1000 people come, only 50 people will survive in the market. That's it. That's a bitter truth. You should accept it. So why this procedure? Why this money management? Because first time you can never get success. I can bet on this. Second time there is a high possibility. Third time 99% you should achieve your success here. If you are not successful in this phase, then mark my words, you stop trading forever. Don't trade at all. You are not suitable for intraday trading. Friends, it doesn't mean that I'm degrading your I'm not paying respect to your skills and all. No, it's not like that. See, one may be good at maths, other may be good at science, other may be good at arts, other may be good at fashion technology. It doesn't mean that an actor is less when compared to a scientist, or a cricket player is lesser to compare to a doctor. No, they have their own respects. In the same way, we are not suitable for medical science. In the same way, we are not suitable here for intraday trading. Better you shift it to short term trading or positional investing kind of things. Okay, if you are successful trader here, then you continue your intraday trading. This is the best advice I can give you for the new traders or novice traders, right? Sir, what about we are already experts? If you have 1 lakh capital, don't dump your entire capital. Keep 70-30. Keep 30% as reserve fund and 70% as your main trading capital. The remaining 30,000 rupees, you don't even keep your in demat account. You keep it in your bank account. Don't keep it in your demat account, because let's suppose you are an option writer, or you are a future trader, or something goes wrong, your SL jumps. Your SL is not your stop loss is not executed, it jumped somehow. Technically there is something wrong. I have seen a lot of people who lost 20 lakhs, 30 lakhs, 50 lakhs over the night in crude. Recent times, in last one month, crude trade. So these technical things can happen. So this will evaporate the complete capital. The complete capital will become zero. I have seen one person whose capital is 20 lakh rupee in commodities. His 20 lakh complete commodity capital wiped off, and he was supposed to pay now more than 70 lakhs. I think 17 lakhs, 17, not 70, 17 lakhs as it exceeded the limit. So these things can happen in trading, and you held the responsible for that. Okay, so that's the reason I say don't keep entire capital in your demat account. Only keep 70% of your capital and remain 30% as a backup fund in your bank account. Keep it calm. Let it be calm there. Right? This is how you should bring your capital into the market. Now this part is over. Until now we discussed about risk reward ratio, and then entry points, then risk management. This is according to the trading. Now according to the capital, how much capital I should bring? This is how you should bring. This is the money management. So that's it. That's all good. What if I am making profits? Yes. And remember friends, whenever you are exiting at cost, people say that, sir, I am exiting at cost to cost. They say that they buy at 100 rupees, they sell at 100 rupees, and they exited at cost to cost. etc. Cost to cost doesn't mean that where you bought you need to sell at the same price. No, if you bought at 100 rupees, you are supposed to sell at 100 plus brokerage charges. Who will give the brokerage? Are you going to pay from your pocket? No, never do that. If you bought at 100 rupees, so at least keep it as 100 plus balance amount, whatever the 1% or 2% brokerage. So 1 or 2 rupee or 1 or 3 rupees, so that it will not go from your pocket. Yesterday I explained in risk reward, right? Even that 1% can make a big difference after a long run. So whenever, keep it in your mind that whenever you are exiting at cost to cost, it means that you are including your brokerage charges also, right? Now let's suppose you made a profit. This is about loss, this is about exiting cost to cost. What if you make profit? If you make a profit of 10,000 rupees, out of this 10,000 rupees, this is all amount is not yours. Remember guys, let's suppose in this 1000 rupees, 10,000 rupees, 500 rupees is brokerage charges. So first you need to keep the brokerage charges. Then again, out of this 10,000 rupees, 15% is a flat tax for the government. So you need to pay 15% tax, which is nothing but 1500 rupees. So the remaining amount, whatever it is there with you, that is only your amount. 10,000 minus 500 minus 1500. So 8,000 rupees is your amount, right? Now, again, there is a small tip. This 8,000 rupees is not your amount. In this 8,000 rupees, again, you split this into 3 parts. 30%, 40%, 30%. This 30% you are going to enjoy as your money. The remaining 40% you are going to invest in shares or gold or mutual funds, wherever you want. You diversify it, I don't mind. If you want to have a recurring deposit in bank, go for a recurring deposit, or if you want to invest in the stock only, then that's up to you. Open another demat account and invest in the stock. Don't merge investing account and trading account, keep them separate. Okay, so let it be in the other way. And the remaining 30%, what is this 30%? This is your backup fund, because you don't know when it is going to hit losses. So keep this backup fund, right? So let's suppose if your 8,000 rupees your profit, then 8,000 into 30%, which is nothing but 2,400 is your daily earning. You can enjoy this 2,400 rupees. You take this money out, pay out, keep the payout every day or at least on the weekend keep the payout, and enjoy in the weekend party or whatever. You buy some dresses for your family, or go for shopping, movie, whatever you want. And remaining 40% you reinvest this. That means, which is nothing but 3,200. You reinvest it in somewhere, wherever you want. This backup fund, again, it will become 2,400. Now keep this backup fund, accumulate this backup fund in another savings bank account. Okay, let it grow. And whenever you hit losses, your capital should be same. It should not get altered. So whenever you hit losses, bring back this capital and add it here. Okay. And if you are not hitting losses, you are continuously making profit, this 2,400 became 1 lakh rupee. Your backup fund became 1 lakh rupee, right? Perfect. Now you take this 1 lakh rupee and say that your capital invested in market, it's completely backed up. Now you no need to worry, because the entire money, whatever you invested, it's returned already to your pocket. Now the whatever the money is there, that is not your money, that is generated by the market. So you can happily enjoy, right? You keep it and invest whatever, wherever you want. So this is what money management. I'm a little bit hurried about this. Try to understand, because we plan to make the video only for 30 minutes. So risk reward, try to follow 1:2. Risk reward, try to follow 1:2. And entry points, keep an eye on entry points, improve the better entry points. Then risk management, have maximum 5% of stop loss. maximum 5% of risk in any day, any session, and out of that split it into 4 into 5 trades, so maximum 5 trades per day, split that into 1000, and according to that, based on that, take the numbers, don't go with the leverages, right? Okay. And money management, if you are a novice trader, new trader, get the 30% at the initial stage, second at the 30% at the second stage, and the remaining 40% at the third stage. If you fail all these 3 stages, then make sure that you are not fit for trading. We are not suitable for trading. It's not our cup of tea. You leave it, forget it, and go for the investing part. Okay. Don't leave stock market. I said leave about intraday trading. Go for the positional trading or swing trading or short term trading. And experts, don't bring your 100% capital, bring 70% only, keep the remaining 30% as a backup fund. And whenever you are exiting at cost to cost, make sure that you are including your brokerage charges also. Whenever you are making profits, make sure that there should be reduction of brokerage charges, and there should be you need to reduce this tax 1500 rupees, which 15% tax has to be paid to the government. Keep them aside, because especially traders, you need to pay in advance tax. Okay, you are not supposed to pay later. We should pay advance tax, so you need to keep this aside so that you can pay at the right time. Whatever the remaining amount, this is again not your full profit. Keep 30% for your daily entertainments, 40% reinvest that, and back up 30%. See, if one day something goes wrong and your total demat account capital becomes a zero, but still your investments can be your assets, or your backup fund can help you. Okay. And one more question I forgot to cover this. Many people ask me, sir, what is the capital should be needed to trade in futures, to trade in trader options and all. See, for equity, I don't mind whatever the amount you say, that is good based on your levels. For equity, I don't put any capital locks. It depends on you. You want to buy 1 share or 100 shares or 1000 shares. But coming to derivatives, especially options, if you want to trade in options, at least you should have 30,000 to 50,000 capital. So don't trade below 50,000 capital, or no, nothing. Let's make it as 50,000 only. Okay, 50,000 capital. Sometimes you can go with the 30,000 also, because you are there with the index. So 30,000 to 50,000. And if you are trading with futures, remember guys, futures, at least you should have 3 to 5 lakh capital, not less than that. Don't tell me your broker is giving leverage, and by using 30,000 rupees capital also you can trade in futures. What if it hits a SL of 5 points? Your 30,000 will become 15,000. So don't tell me that stories. I'm experienced this. Almost 15-16 years of experience I have in trading. So don't tell me all those stories. Better avoid those kind of things. Okay. So if you are trading in options, you should have minimum 30 to 50,000 capital. If you are having futures, you should have minimum. If you are trading in futures, you should have minimum 3 to 5 lakh capital. Nothing doing. If you are having less than 3 lakh rupee, don't even dare to think about futures. No, it's not your cup of tea. It's not your job. If you have capital less than 3 lakh rupees, you are not supposed to trade in futures. That's it. In options, if you are having less than 30,000 capital, you are not supposed to trade in options. That's it. Okay. And that's it, guys. Follow these rules, this risk reward and entry points, this risk management and money management. If still you follow all these 4 points, you fail, then come and tell me. It will never happen. I can bet on this. I can challenge on this. Okay. From tomorrow onwards, we go into the again chart pattern chart kind of things, like support, resistance levels and all. So we discuss from tomorrow. The topics will be very interesting. Today's session will be a little bit boring, but these two are really important. That's why I covered it on the first 2 sessions. Okay, you watch these 2 videos repeatedly again and again, so that all these points should sit in your brain and you can understand, digest these points again and again. Whenever you are trading, these points should come into your brain. Okay, thank you guys. See you tomorrow. Bye bye.